You're listening to Bottomshelf Bitcoin. This is episode 33.
Relax. Enjoy your coffee. Okay. Good morning, everyone. Take a chill pill. Okay.
Hey everybody, welcome back to another episode of Bottomshelf Bitcoin, the podcast that puts Bitcoin knowledge within everyone's reach. As always, I'm your host, Josh Humphrey, and my guest today is Jeff Vandrew. Jeff is an attorney and a CPA, and he helps particularly focus on the tax pain points regarding Bitcoin and things like that. So, Jeff, welcome to the show.
Thanks. Great to be here.
So before we get into all that, Jeff, can you tell us a little bit about your background and how you got where you're at, and then how you got into Bitcoin?
Sure. So, as you mentioned, I'm both an attorney and a CPA. I've been doing that for a while, over 10 years now. My background in terms of how I got involved in Bitcoin is kind of interesting. Even though I'm an attorney and a CPA, before I started doing that, I was actually in the computer science program at Rutgers. So I do have some degree of a technical background, and I did that for a while before I sort of made a career change and went in this direction. When I graduated law school, I knew that I never wanted to wear a suit or go to court or, do anything like that. So I immediately kind of opened up my own practice. During law school, I had worked for, other tax professionals just to get some experience. But as soon as I graduated and I had that licensing squared away, that's when I went out on my own. And this was back in 2007. So Bitcoin didn't exist yet. And so obviously my practice was very tax focused, focusing on income tax, a lot of death tax planning, things of that nature. There was no Bitcoin. Bitcoin did come onto my radar very early, probably at first, maybe in like 2010 or 11. I didn't buy any at that time, but I was kind of interested in it because I was kind of a gold bug. So, it was something that was at least appealing to me. It's like a natural evolution from gold to Bitcoin. Some time went on, and I, being a tax professional, I was like, wow, wouldn't it be, the IRS issued its guidance eventually on how Bitcoin was taxed. And I decided, well, wouldn't it be cool to hold this within an IRA or a 401k or a Roth IRA? Then if this thing really skyrockets, in value, you can remove all of those gains from the tax system altogether. So I kind of, on my own, just for myself, devised a plan where I could hold Bitcoin in a retirement account like that. And this was back in 2014. And at the time, since I started doing this for myself, I kind of figured like, well, why don't I just start, offering this as a service to other clients? And like back then, no one cared about it. I published like an article back then. I published an article on CoinDesk about it, because they were just looking for submissions back then. And Bitcoin Magazine and a few other places, and a few people were interested. Back then, some people thought that I was like a secret federal agent trying to get them to pay taxes they didn't know. It was a different world back then, right? It was a lot less mainstream. So that was in 2014. And then I just kind of, it was a service I always offered to my clients, but it was, never that really big of a deal. And then the run up came in 2017. And then all of a sudden everybody was interested in this. And I got a lot of that business because it was something that I already had in place. And what made it unique, what I was offering as compared to what I was offering as a lawyer compared to what most of like these Bitcoin IRA marketing companies were offering, is that I help people set up a structure where they hold their own keys. So like a lot of the providers that you see out there, they hold some or all of the keys, and whenever you want to do, let's say, a trade, you have to run it through them, and there's fees involved and all that stuff. The way that I had set this up was in such a way that you hold the keys, you can buy and sell Bitcoin whenever you want without any real third-party permission or anything like that, and you're kind of good to go. So 2017, that really took off, and I kind of became known for that, and that pretty much, brings us to where we are today. The interesting part is, as this has become a bigger part of my practice, I've also gotten more into the technical side that I was involved in, back in the late 90s, 20 years ago when I was at the Rutgers computer science department, as a student. I recently actually started doing a little bit of development again. And just for the community, I released an open source plugin for BTCPay Server that basically syncs your QuickBooks to BTCPay Server. So that was a lot of fun. I had a lot of fun doing that. And the joke I always tell with regard to that is that I've been programming for 20 years. There was just an 18-year sabbatical in the middle there. So that's my story.
Cool. Yeah, I definitely want to get into your QuickBooks plugin in a little bit, but let's talk more about your IRA stuff. Just so we're all on the same page, kind of what is an IRA and what's the difference between a traditional and a Roth IRA?
Sure. And just a quick aside on that, because I'm sure you have listeners from all over. The retirement account stuff we're going to be talking about is U.S. stuff. So
yeah, sure. I guess I should have said that. Yeah, this is going to be kind of U.S. specific stuff here. Global listeners, sorry, you're just going to have to suffer through it today.
Yeah. So here in the States, I mean, there are an IRA is the main type of personal tax advantage retirement account here in the States. There are also employer-sponsored retirement accounts. The main one of those is a 401k, although certain employers may offer a 457 or 403b instead. They're all more or less the same. But even if you have one of those employer-sponsored accounts, you can typically roll it over into an IRA. So an IRA as a retirement account, the tax advantages depend on whether it's a traditional IRA or a Roth IRA. A traditional IRA, you get a tax deduction when you make a contribution to the IRA. All the growth from then on is tax-free, and then you just pay income tax on the amount that you withdraw when you start withdrawing money in retirement. You can do tax-free rollovers from a traditional employer account, like a traditional 401k, into a traditional IRA. The other type of IRA is a Roth IRA. A Roth IRA works in reverse. A Roth IRA, you get no deduction for the contributions, but when the growth in between while you're still working is still tax-free, the advantage to the Roth is, in addition to that growth being tax-free, when you make withdrawals after your retirement, those withdrawals are also tax-free. Now, I said before, you can do a tax-free rollover from a traditional 401k or other employer account to a traditional IRA. Likewise, if you have a Roth 401k with your employer, you can do a rollover from your Roth 401k into a Roth IRA. And those are both tax-free rollovers, depending on which way you go there.
Very cool. So what would be the advantage or of having your Bitcoin in this type of account?
So the advantage would be that you don't pay any capital gains tax on the gains on your Bitcoin. So here in the States, the way Bitcoin works tax-wise is when you buy Bitcoin, let's say that you buy it, right? There's other ways to obtain Bitcoin, but just for ease of discussion, we'll talk about buying it. So you buy one Bitcoin on an exchange for $3,000. Then in the future, at some date, let's say that I either sell it for $10,000 or maybe I don't sell it at all, but I spend it. Let's say I exchange it for a $10,000 car. Either way, that's still treated as a sale for tax purposes. And I'm considered to have a capital gain of $7,000. That $7,000 is the difference between the amount that I sold it for. Again, doesn't matter whether I sold it for dollars or I sold it for a car or I sold it for some other good. It's the difference between that sales price and then the purchase price, which is considered my tax basis. The advantage to holding within the IRA is all of those gains escape taxation. None of that stuff matters. You don't even have to track your tax basis because it just doesn't matter at all. The only time you pay, if it's a Roth, you never pay tax at all. So in that example that I just gave, if you had bought that Bitcoin for $3,000 and in the future sold it for $10,000, that $7,000 in capital gains would never be taxed ever. Likewise, if Bitcoin went up to $1 million of Bitcoin, all that gain would just be out of the tax system for good. With the traditional IRA, you would have to pay income tax when you pulled it out of the IRA. So there's a little bit less of a tax benefit there. Usually when we do the traditional instead of the Roth, it's because someone has a bunch of funds in an old 401k and they want to use it to buy Bitcoin. And the only way, if you have funds in a traditional 401k or a traditional IRA already, the only way you can turn around and use those funds to buy Bitcoin without having to pay a bunch of interest and penalty up front is to roll it over into a self-directed IRA structure like the one that I set up for people. And that's totally tax-free, avoids all the interest and penalty, and then you can turn around and use those funds to start buying Bitcoin.
Very cool. So like if, say somebody, I don't know, worked at a job for a few years, had this 401k, and then they changed jobs, or, you know, like what the current situation is, I guess, price-wise, where it's like the markets are starting to come down, but they're a believer in Bitcoin. Hey, Bitcoin is really cheap right now. They might be able to roll over that small 401k they had with that old company into this and be able to buy Bitcoin for
right. And they'd have two options there. They could do a tax-free rollover into a traditional IRA and use that. Or if they were really bullish long-term, they could actually do a traditional to Roth conversion. That's not tax-free. You have to pay income tax up front on that. You don't have to pay any penalty. But if you do the traditional to Roth conversion, the benefit is when you pull it out someday in the future, it's tax-free.
Gotcha. Very cool. Now, could you do, well, I guess if it's self-directed at that point, I was going to ask if you like full versus partial into Bitcoin, but I guess at that point, it's just kind of up to you, whatever you want to do with it.
Yeah, you can do it partial. Partial rollovers are fine, as much or as little as you want. If you feel that at some point in the future that you own too much Bitcoin and you want to own less, you can always you could sell some Bitcoin and move a portion of those IRA assets into some other more traditional asset. That would, again, all be tax-free. That wouldn't create any taxes at all. Whereas actually, if you held the Bitcoin outside of the IRA, when you were rebalancing your portfolio that way, you'd have capital gains income. Gotcha.
Very cool. You mentioned earlier that you have the private keys. Can you, talk a little bit about the security model or whatever on that?
Sure. So, it's really more of a legal issue. So legally, the way the Internal Revenue Code works in the United States is every IRA has to have a third-party custodian that is licensed, one of two things. The third-party custodian either has to be a bank or has to be an entity that is specifically licensed by the IRS as a non-bank custodian, right? So banks are out. Banks aren't going to obviously deal with Bitcoin. So the way most of the, products that Bitcoin IRA products that you see out there work is that like a third party goes out and gets the IRS licensing as a non-bank custodian. And then they hold your keys for you. You tell them when you want to execute trades. They charge a bunch of fees for that, and you're not fully in control of your keys. The way we set up these things for you is we use a third-party non-bank custodian too. We're legally required to. We kind of play a little trick so that you can hold the keys. When I say a trick, this is not at all legally borderline or shady or anything like that. It's just somewhat creative. It's very common, nothing to worry about. But what we do is, instead of having that third-party custodian hold your Bitcoin, that third-party custodian holds one asset, and that single asset is a limited liability company, which again is owned by your IRA, but we name you as the manager of that LLC. As manager, you have control over all of that LLC's assets. So let's say you roll dollars out of a 401k into this IRA. Those dollars go to the custodian first, but then the custodian just turns around and drops them into the LLC. The LLC, again, you're the manager. So once those funds hit the LLC, you have the ability to invest them in whatever you want. Now, the IRS does have certain things that you can't invest in, they're called the prohibited transactions rules, but those don't apply to Bitcoin. Bitcoin doesn't violate any of the prohibited transactions rules. So once the funds are in your LLC, you have the ability to then open up an account on an exchange in the name of that LLC. Or if you don't want to buy through an exchange, you could open a local Bitcoins account in the name of your LLC or whatever. And then at that point, you can go ahead and buy Bitcoin. And once you bought Bitcoin on the exchange, you can withdraw it to a hardware wallet, a paper wallet, whatever you want. That hardware wallet or paper wallet is not considered to be owned by you. It's considered to be owned by the LLC, which is in turn owned by the IRA. So that's sort of, in a nutshell, how it works. One of the big services we provide to clients, the biggest roadblock in that whole setup that I just explained is getting an exchange account, assuming that you're going to buy your Bitcoin on an exchange, is getting an exchange account open in the name of an LLC. Because in terms of buying your Bitcoin, you can buy on an exchange or you can buy from local Bitcoins or wherever, but you can't buy any Bitcoin from yourself or from your family members. That is a prohibited transaction. You have to buy from an unrelated third party. So for most people, the cheapest and easiest way to do that is an exchange, right? If you're going to buy, let's say, on an exchange, you're going to have to open an exchange account that is not in your personal name, that's in the LLC's name. Anyone that's ever opened an exchange account knows that the KYC for an account on an exchange is a pain. It's a lot more of a pain when you're setting one up for an LLC. The good news is, I've done 1 million of these, so I can get people through the KYC process pretty quickly. I'm kind of a pro at it. It's all a matter. Obviously, we absolutely never say anything deceitful or in any way on a KYC application. But it is a matter of knowing the right way to phrase everything so that you don't unnecessarily send up any red flags with an exchange that otherwise wouldn't be up. So one of the services I provide when we set up the structure for a client is I give them assistance in getting through the KYC. And I also know which exchanges will get you through KYC faster than others. And that's just a matter of who has better customer service. Some exchanges have really good customer service on the KYC side. They work with you to, fill in any gaps in documentation that they may need. Other exchanges just, you just fall into a black hole and you might not hear from them for months or something like that. So that's a big part of the process as well.
Okay. Anything else you wanted to go over with that stuff before we kind of move into the BTCPay stuff?
Just a couple other things, just common questions that I get about this, just common questions and concerns. Sometimes people will ask, well, then don't I have to report my Bitcoin holdings to the IRS every year if it's in an IRA? So the reporting that gets done to the IRS every year with an IRA is the value of the account on December 31st, not the individual assets. So what'll happen is that third party custodian that I mentioned, every year they send you a form and they say, hey, on December 31st, what was your account worth? And then, they're going to ask for some information about potentially what was in there. But what gets reported on the IRS form is actually just the value on December 31st. And that complies with, all the IRS regulations. Now, of course, if you buy your Bitcoin on an exchange rather than on, say, local Bitcoins or BISC or something like that, obviously those transactions are going to be attached to your identity. I mean, that's just the way the law works, but that's not a function of it being an IRA. That's just any account, that you open on an exchange. That's just how they work, here in the States. So that's one concern, that I sometimes get. I guess that's really about it. I think everything else we pretty much covered.
Yeah. So then they just know how much your account is worth in US dollar terms, regardless of what that's made up of, whether that's stocks or Bitcoin or some mix of all the above. Right.
That's the only thing that gets reported on Form 5495 to the IRS annually, and the custodian takes care of that reporting for you. So that's in terms of that, how that end of it goes. Obviously, like I said, if you've got an exchange account, whether it's in an IRA or a personal name or whatever, that's obviously all, your
well, yeah, it's KYC,
Yeah, exactly.
Is there any variance state to state, or is this all the same across the board?
So IRAs are federal, so there's no variance state to state on that. In terms of how we handle setting up the LLC, that can be different state to state only because some states impose all wacky fees on LLCs, but we have ways of getting around that. So normally when you form an LLC in your state, let's say you live in California, but you form an LLC in Nevada, right? Well, normally that doesn't get you out of any fees because you still have to register that Nevada LLC as a foreign LLC in California to do business in California. And then you're subject to all of California's crazy LLC fees anyway. By the way, I'm using California in this example because California imposes an $800 a year fee on LLC.
Oh,
yeah. But the good news is, in this situation, you can form an out-of-state LLC because your LLC is not holding tangible property or doing business in any state. Therefore, it's not required to register as a foreign entity. So often, like for people in California, what we end up doing is forming an LLC in Mississippi for them, because Mississippi has 0 annual fees on LLCs. Now, in most contexts, if you were in California and you formed an LLC in Mississippi, it wouldn't help you because you'd still have to register that Mississippi LLC in California and pay that $800 a year fee. However, because the LLC in this case is not going to own any tangible assets in California or conduct any business in California, it doesn't need to register in California. Therefore, we can get away from those sort of wacky state level fees by forming an out-of-state LLC. So there's certain states where that's the case. New York has a crazy publication requirement for LLCs. So for New York residents, we typically also form an out-of-state LLC to sort of get away from that issue. So yeah, that's the only state to state difference. And as you can see, there's a pretty easy workaround there.
Yeah. What about like, in dealing with those exchanges, you're talking about, doing business in those states. What about the states that those exchanges are in? Does that affect it or not really?
Well, the exchange is not your subcontractor. They're not doing business on your behalf. In fact, they're your counterparty, right? I mean, they're just someone that you're paying for a service. So that would not create, a nexus for doing business. The LLC is in fact not doing business at all. It's only holding passive investment assets, and all of those investment assets are intangible. So it's basically doing business in no states, at all. It's really only has obligations for filing in its state of formation in that situation. So long as you don't turn around and use that LLC to invest in tangible assets like real estate. So if you use that LLC to go buy real estate in a state that had one of those fees, then you would be subject to it. So if you used this IRA LLC to buy an investment property in Los Angeles, you'd then have to register in California and be subject to those fees. But as long as you're just holding intangible assets, and Bitcoin is an intangible asset, the LLC would have no nexus in California.
Very cool.
And standard disclaimer here, I provide this all as an educational reference to your listeners. So if you have any questions, always consult with a lawyer. Right.
Sure. Yeah. We don't want to get anybody in trouble here. Yeah. Okay. Well, let's transition. Let's talk about this QuickBooks thing. People who have been listening to this show know that I'm a big fan of BTCPay Server. I missed all of this because, there's no way you can be involved in every project. I was hanging out and lurking in their Slack channel a lot for a while, and just life has been busy. So I totally missed this until I saw you tweeted about this, but go ahead and tell it. Well, I guess maybe for people who aren't familiar with QuickBooks, just give us a basic explanation of what QuickBooks is and why integration matters.
Sure. So QuickBooks has a near monopoly on small business bookkeeping. So there are other entities that are players for like medium and large businesses, but QuickBooks is increasingly even moving into medium-sized businesses. It's like a Goliath, right? I guess this is the best way to put it. Essentially everybody uses it. Because I have a background in tax, I use it all the time. My business clients all use it. The only competitor they really even have at this point now is a company called Xero. which is an Australian company. And I believe it's very popular in Australia, but not so popular here in the States. So for better or worse, QuickBooks is sort of this behemoth. It's actually owned by Intuit, the same company that owns TurboTax. So QuickBooks is this giant behemoth. What they've been doing in recent years is moving away from your locally installed desktop QuickBooks software and moving towards their cloud product called QuickBooks Online. For good reason. QuickBooks Online is way easier because you can just create a login for your accountant. So if you have problems, your accountant just sitting at his own computer at home anytime he wants can log into your QuickBooks, make adjustments, check out what's going on there without having to clunkily, exchange files back and forth. So it's a very smooth thing. Additionally, one of the things that a lot of service businesses use QuickBooks Online for is it has built-in invoicing functionality. And I use it for this. So, let's say that you are my client, right? Like I'm your lawyer, you're my client, and it's time to send you your bill for the month right from within QuickBooks, which is maintaining all my accounting data anyway. I can just really quickly hit a button to create an invoice. QuickBooks will automatically email that invoice to you. Right on that electronic invoice that you get emailed is a button. You click the button, and by clicking the button, you can pay that invoice immediately, which is great for service-based businesses or any business that's billing their customers on an invoice type basis, right? So when you click that button to pay that invoice in QuickBooks, you have a few options as a merchant if you allow that. You can accept ACH payments, which QuickBooks itself processes the ACH payment for you. Those are, for lack of a better term, a good deal because no matter how large the transaction is, QuickBooks only bills you 50 cents for that. So if I could send you a $10,000 bill, you pay it by clicking the button through ACH. And ACH, for those who don't know, is a direct bank transfer, is ACH. It's similar to what in Europe would be called, I think they call it SEPA, S-E-P-A. I think it's something like that. But yeah, in the States here, it's called ACH. So you click on that button, you pay via ACH, you pay $10,000, I get $9,999 and, 50 cents. You can also choose to accept credit cards. Intuit processes those for you too. If you have Intuit process your credit cards, obviously they charge a percentage like a normal credit card processor, right? And to Intuit's credit, and I don't want to sound like I'm cheerleading them because they have some somewhat, some business practices that not everyone likes, but to their credit, Intuit got on the Bitcoin thing really early. For several years, they've had native Bitcoin payment integration. And their native Bitcoin payment integration, it's called Intuit Pay by Coin, requires that you have an account either with BitPay or Coinbase Merchant. So basically if you set that up and you want to allow your customers, when they click that button, to have the option to use Bitcoin, you have to basically give QuickBooks an API key either from QuickBooks Merchant or from BitPay. That's how it works. So, because it was originally, they were very early on this, that was the only option. I had been using that for a long time. When I would send clients, they would click the pay button. They would get, they would have I don't take credit cards, but I take ACH or Bitcoin. So they could pay the ACH or they could pay the Bitcoin. If they did Bitcoin, obviously it worked through BitPay's interface. So when BTCPay came out, I was like, well, wouldn't it be cool, if you're a service business like me or any business that's invoicing people, right, through QuickBooks, which is very common, that when they got emailed this invoice and they clicked the button and, boom, they had the ability to pay via ACH or Bitcoin, that the Bitcoin payments would be processed through BTCPay instead of BitPay for a whole host of reasons that I'm sure you've talked about on the show, why BTCPay is preferable to BitPay.
Yeah.
So I started looking into it and kind of determined that it really wouldn't be that hard to do, right? It didn't seem like it would be that difficult of a thing to integrate. And also around this time, Justin Moen, if you're familiar with him, I had started taking his Biddle Bootcamp class. I had met him back over the summer at the Nakamoto Institute dinner out in Dallas. He seemed like a nice...
Oh, really? Was he there?
Yes, he was there. Yeah.
I missed on that. Yeah.
Yeah.
There's a lot of guys there.
Yeah. We met by chance because I was sitting outside with Pierre, just kind of like taking a break in the sun, and Justin came out and just got to meet him that way. He just happened to be outside. It was a chance meeting. So I kind of remembered him from that. And then I saw on Twitter that he had launched, Biddle Bootcamp, and it seemed like a real cool idea. So I was like, you know what? I'll check this out. I really need to sort of get back into programming and really understand more of the technical side of this. So I signed up for that, and I still remembered a lot of the basics of programming from when I was doing it 20 years ago. You never forget the broad strokes. So ironically, in getting ready for Biddle Bootcamp, I had to learn Python because Python didn't exist, or it existed, but was not commonly used in 1999. It was very new. So I kind of had to learn the basics, for that class, which I luckily found really easy. If you have a background in another language, which I did, learning Python's like really easy. I think I picked up most of what I needed to know in like an hour, frankly, from looking at it. And then I gained a lot of really good experience by going through Justin's lectures in the boot camp. And, after I got through a bunch of Justin's lectures, and I kind of started thinking about, well, now that I have a little more technical ability again, I've gotten more into it, how do I want to contribute? So I thought about the whole BTCPay BitPay thing that kind of popped back into my brain. So I did some research. I went on the Intuit developer site for QuickBooks, and I found out that there was a community-sponsored Python library for QuickBooks Online for manipulating the API. And there was a Python library for BTCPay as well. So that kind of really made it easy. All I really had to do was create a plugin for BTCPay that kind of did three things. Number one, it would listen to payment notifications from BTCPay. And then when it would receive one of those payment notifications, it would then turn around and sort of use that to sync data. Well, actually, let me take a step back. What it really needed to do was listen for clicks on a QuickBooks invoice, first of all, right? Then once it got data from a QuickBooks invoice, turn around, take that data, use it to, through the API, create a BTCPay invoice. And then once that BTCPay invoice was paid, the plugin would need to listen to the payment notification, grab it, and then use that to update QuickBooks, right? Post the payment in QuickBooks. So the user wouldn't have to manually record that payment that was made through BTCPay in QuickBooks. So I went and I set up the plugin. I kind of put together a very clunky version of it, about a week and a half ago. It worked, but it was just sort of, I guess the best way to put it was clunky. And I tweeted about it. And after I tweeted about it, Nicholas Dorier, who's super nice and super generous with his time, reached out to me on Twitter and said, hey, this is pretty cool. Here's all the things you need to do to make this better. And if you make it better, we'll integrate it right into BTCPay so that you can access it right from our, web interface. And it'll also sort of automatically update, as you release new versions, through the BTCPay update process. So when he reached out to me, I was really excited, and I basically took all of his suggestions. I took about a week and spent a bunch of time just adding a lot of new features, making it much easier to use and just less clunky, for lack of a better term. Then I Dockerized it, since that was necessary, since, BTCPay runs through Docker. And, he was nice enough to, like I said, provide his time and help. And we got it sort of integrated in. And, as of right now, you basically, if you have BTC Pay running on, I'll just use an example, on a Luna node, there's just a simple command line. There's simple command you need to just enter on the command line that will activate it. And then then that's it. I mean, from then on out, once it's activated, it's just sort of integrated into your BTC Pay and you're good to go.
Yeah. Nicola's kind of a machine when it comes to coding, and I don't think he ever sleeps.
Yeah. Well, it's funny since he's not here in the States, like, I would always like wake up to his feedback, right? Because it would be, I'd be sleeping and then I'd have all his feedback, and vice versa. Like I would send him stuff and I'm sure he was sleeping and he'd get back to me, when he woke up.
So, well, very cool, man. I'm curious to see how much this takes off. And I think this opens up, for a lot of people who are already using QuickBooks to then, I think there's a lot of people probably out there who would go, yeah, I mean, I'd be willing to take Bitcoin, but I don't know how to do this. I mean, I guess if that's already in QuickBooks, they may have already been using BitPay or something like that. But this just is really nice because it offers that option to not have to use BitPay or Coinbase. And, I think that's a good thing for most people.
Right. And that was sort of the idea. So like I tried to look at it like this, in terms of increasing it. QuickBooks is maybe not something that like Bitcoiners use in large numbers, but it's like, I can't emphasize enough how immensely popular it is. So even if only a small number of people that are using it for invoicing are, let's say there's only a small percentage of the people that are using it for invoicing or even bothering to use the BitPay Coinbase plugin that Intuit provides. Well, that's still going to be in gross terms a pretty substantial number of people, right? And even getting some of them to switch over to, BTC Pay would be pretty cool. It also provides, some people, will just find it appealing because if you're taking the payments through BitPay, through BTC Pay, you're cutting out BitPay's fees. So even people that are only looking at it from an entirely, selfish isn't the right word, but you get what I mean. Just from a financial perspective, they don't have to worry about, BitPay's fees or holds, or we've seen BitPay shut down people's accounts and, do all kinds.
And Coinbase as well.
Right. And Coinbase as well. Right. Exactly. Yeah. I mean, Coinbase is no better, than BitPay, in that regard. So the reason I did it was for that, it just seemed like there was at least a decent pool of people here that might be interested in this if they heard about it. Something that can increase adoption because again, QuickBooks is so popular. And I thought it was a good place to start because QuickBooks is something that I know how to use, right? I mean, it's just sort of my personal background is for work. It's something that I need to use. It's probably something that I'm more familiar with than most Bitcoiners. So I thought it would be a good thing for me to tackle.
Yeah. Well, I love this, that both of these kind of big areas that we've talked about today started out as pain points for you that you solved and then were able to turn into something to help everybody else out with. I'm kind of in the process or sort of have already launched, but very soft launch, Bitcoin Merit Badge, which is kind of like morale patches and just kind of these goofy little trinket things with Bitcoin themed stuff. But this was kind of timely for me to see all this stuff from you because I've just realized like I need to figure out how to use QuickBooks to do all this inventory accounting stuff. So
yeah, exactly. And that brings up I think two really good points you make there. Number one, as I'm sure you're aware, if you're going to be selling your stuff through, through like WooCommerce or something, BTC Pay has a really great integration for that already.
Right.
And I personally have nothing to do with it, but I've heard it's fantastic for guys like you that are selling, tangible goods. And then secondly, one of the things that's really cool about being in like a bear market is you can experiment with stuff like this. And obviously you never want to put out a bad product, but it gives you license to do a little more experimentation because things aren't as mission critical right now, right? You follow what I'm saying by that? Like it's, because the, let's say, volume of Bitcoin transactions is probably a little slower right now. It's a good time to like really experiment around, try new things so that when we're not in a bear market anymore, there's going to be all these great products and services and cool stuff going on. A great example of that, far more important than anything I've ever worked on, is like Lightning, right? Like this is like the best possible time for everyone to be developing, Lightning applications. Because right now in this bear market, we don't have as much fee pressure. So if all this stuff gets straightened out and becomes, really, really both easy to use and reliable now, that means when, on-chain fee market pressures really start driving everything up again, Lightning will be there ready to rock and roll.
Yeah, exactly. Not to just keep harping on Coinbase, just because, I don't know. I think I disagree with with some of the things they do, but I also don't like to just sit here and talk about things that aren't positive. I rather focus on positive things. But, that was kind of one of the things that they ran into last year, was that they had not put a whole lot of effort into scaling and things like that. And they kind of banked on the 2X thing, I think. And then when everything started getting crazy, they couldn't even catch up to their own business volume needs, much less work on scaling at that time.
Right. Yeah. I mean, they famously weren't even batching. So,
Right.
Yeah.
Exactly.
Yeah.
So if you build it in the slow times, then it's ready for when the traffic comes.
Yeah. Exactly.
All right, man. Well, cool. Well, anything else that you want to add to any of that?
No, I just, I thank you for having me on the show. It's been a lot of fun. And if you're out there and you're listening and you are a QuickBooks user, check out the plugin.
Yeah.
And more importantly, I'll shill my own stuff too.
Yeah. Go for it.
If you're out there and you've got an IRA or a 401k that you're looking to roll over, if you get in touch with me, we can set up a, self-directed setup for you. You'll hold the keys. You'll be able to hold your Bitcoin in a tax-advantaged way.
What's the best way for people to get in touch with you?
So best way to get in touch with me if you're interested in setting up an IRA would be my site, Vandrew.com. That's V as in Victor, A, N as in Nancy, D as in David, REW.com. If you go there, there's some cool resources that explain further how the IRA setup works. And if you want to move forward, there's a button on that page that you click and to schedule an initial phone call with me to get started. So the whole process, we make it really easy for you. And if you want to check out the QuickBooks plugin, on the other hand, BTCQBO.com.
Very cool. And then you are on Twitter. What's your Twitter handle?
Vandrew, ATTYCPA is my Twitter handle. Yeah, you can check me out there as well.
Cool. And I'll put links to all that stuff in the show notes, in case people can't remember those. So, very cool. Jeff, thanks for coming on. I really appreciate your time.
No problem. Thank you.
Okay, guys, that's going to do it for our show today. Be sure to follow Jeff and check out his website, Vandrew.com, as well as his integration with BTCPay. I've got links to all that in the show notes. I thought this was really timely given that we're about to start a new year and there's always financial and tax implications involved there. So, the other thing is, if you're wondering why we were talking about how the problems involved with BitPay as a payment processor, I've included a link in the show notes to the interview I did with Nicolas Dorier. That's episode 13, so bottomshelfbitcoin.com/13, or the link is in the show notes, but where he talks about why he created BTCPay Server in the first place, and all the issues with BitPay and the things they've done that are not good for Bitcoin in general. Very self-serving and supporting forks and things like that. As always, the best way you can help the show is subscribe so you don't miss an episode, and share it with your friends. Another way is go to bottomshelfbitcoin.com/donate, and I've got a link there to my Tallycoin page, which is where I'm kind of moving everything I'm moving away from Patreon just with the way that they've been doing this deep platforming stuff. I haven't had any issues with them there. I don't use it that much anyway, and so I am moving everything over to Tallycoin. DJ Booth's been doing some really good work there. He's got goals and perks and basically everything that you would have on Kickstarter or Patreon, other than the recurring payments, which is a Bitcoin protocol issue and not a Tallycoin issue itself. So I've got a couple of goals up there, and I've got some perks. They're just kind of test things. But if you have ideas for other things that you would, perks that you think I could offer that you feel like would help influence you to support the show or whatever, or make it better, let me know. That would be much appreciated. They also have integration for Paynims and Lightning, which I don't have activated right now, but my Paynim is on there. So all that's kind of in one place. And then you can also go to bottomshelfbitcoin.com/kidsbook if you want to use that link, referral link, to purchase the Tuttle Twins books. Those are great books. And I also mentioned earlier in the interview, bitcoinmeritbadge.com. That's my fun little site. I've got a couple of patches up there, just kind of Velcro patches. You can show off your love for Bitcoin or your accomplishments or whatever. So I've got more patches coming soon that are not up there yet. So be listening for me to be shilling that more often when I have more products to ship. So as always, you can find me on Twitter at BottomshelfBTC. And if you have questions or ideas or whatever, my DMs are always open. And next week, 10th anniversary of the Genesis block. Very cool, on the 3rd. So if you are able to go to New York, I highly recommend checking out an event that Tales from the Crypt putting on. Super jealous of those guys that can go to that, because I have to work my regular job, so I'm not going to be able to go. But I will be releasing a 10th anniversary episode with Clark Moody, where we look back on the past and future of Bitcoin. So check that out then. All right, from Bottom Shelf Bitcoin, I'm Josh Humphrey. Thanks for listening.